Hello, everyone. Happy Sunday to you, and I'm pleased to welcome you to another video tutorial as we are going to be taking a technical dissection of the GBPUSD chart. So, before we go into the details for the coming week, I would like us to review the key moments that we had during the course of last week before we go into the details for this week. And talking about last week, the week started with a consolidation phase where price action was initially trapped between the 1.24350 level and the 1.2400 area. And it was on the same day that we had the support line at the 1.2400 level triggered to incite our first sell position for the week. Then after that, we saw a situation whereby pressure come in, price action went into what we thought will be a retracement phase, later on leading into another wave of bullish momentum. So the second key moment didn't come until Wednesday 12th of April. As you can see here, we had some chopper situation happen in the market where price action we had some selling opportunities but didn't last long. We also had some buying opportunity that didn't last long before we were taking out at break even or probably at small profit at some point in time. So on the 12th of April, that was on Wednesday, we had an opportunity to buy after the volatility in the market during the CPI event. We saw that volatility happen, and I mentioned here that we are going to be buying at the breakout of the 1.24500 level. So with a buy stop order above that structure, we had our first buy position, major buy position for the week triggered, breaking out of that key structure, and we continue to ride the move all the way to the upside. And at every point in time, I mentioned that we move our stop loss to secure that position, as you can see here. Then another moment came in on Friday. That was prior to the retail sales and the CSI event, where we had an opportunity to be part of a sell-off. You can see what happened here during my morning live session on YouTube. I shared this update where we were looking out for a breakdown of that trend line to give us an insight into a possible downtrend, and we were lucky enough to be part of this move as we rode the move all the way to the downside, adding more positions at the breakdown of key structures, as you can see here. If you do want to do a self-observation of how we took advantage of this trade during the course of the week, feel free to check the link in the description box of this current video. And if you are watching from my YouTube channel, you will be seeing the link to this commentary at the top right hand side of your screen right now. So with that being said here, let's dive right into the current market structure. As you can see, we are right on the daily time frame. And before I go into the structure, you will see that it has been obvious that price action has been bearish for the last I think about 10 months now, 11 months now. Price action has been very bearish in this market. However, if we zoom in, though we had some bullish positions, if we consider what has been happening in the market since the month of September last year, and after connecting the series of higher lows, you will see that we have this bullish trend line. Now, looking at the structure, one thing you would have observed here is that since the month of December last year, we saw how price action has been finding some resistance around the 1.24500 level. At every point in time, buyers try to break out of that structure. We saw the first situation happen here in the month of December. We saw it happen again in the month of January this year as well. And then during the last couple of weeks in this market, though we saw price action come into that structure, but we had a breakout happen. We had one happen here during the first week of this month. Then we also saw during the course of last week trading session, we had a buy position, but price action, as you can see on the last trading day of last week, we saw an engulfing bearish candle bringing price back below the 1.24500 level. And what this simply tells us at this juncture is the fact that the 1.24500 level has been a strong selling niche in this market in the last 4 to 5 months. Though we had a breakout a couple of weeks ago, we had a breakout, but we can see that the momentum from the buy-ins didn't last long, as at every point in time we had the breakout of that structure, price at drop back below the 1.245 to further emphasize the strength of the sellers in this market. And if we look closely into that structure, we can see that the highest point this year has been the 1.255, where we have double rejection, giving us something that looks more like a reversal pattern in the form of a double top structure. And if you look at this closely, if we consider the impulsive move that led into the structure, there is a high chance that we might likely be seeing our price action do some retracement back into either the trend line here to incite another wave of bullish momentum, or probably drop below the trend line to incite a trend continuation back into that support line at the 1.1800 area. So this is one of the scenarios we are going to be looking at, and this is basically considering the fact that this level has been a strong selling niche. Then another thing that could happen in this market is probably a trend continuation if it so happens that price action breaks out of the 1.25500 level to the upside to incite a trend continuation. So to be able to identify a potential trading opportunity, I was able to identify a simple setup on a much lower time frame where we are going to be dissecting what has been happening here in the last couple of weeks to make a conclusion into what our expectation will be for this week. But before we go into the details on the lower time frame, I would like us to have a look at the economic calendar, as we have a couple of macroeconomic events that will be affecting the pound sterling this week. And you all know that despite the technical positions we are making ahead of the week, we will need some catalysts that will drive price action so that we can make some profit off this chart. So that is where the economic calendar comes in. And if you look at the economic calendar here, we want to be focusing on events that will be affecting both the pound sterling and the US dollar for this week. And from the look of things here, we don't have any macroeconomic event, high impact macroeconomic event that will be affecting the dollar. So we are going to be focusing on the pound sterling, and the first event is coming in on Tuesday, April 18th, and that is the claim account change. And this is an index that presents the number of unemployed personnel in the United Kingdom. And one thing about this data is that the higher the reading, the more bearish the pound sterling is expected to be, and the lower the reading, the more positive and bullish the pound is expected to be. Now, the previous data came in at minus 11.2k, as you can see here. So we're expecting a consensus of minus 11.8. So we are going to be looking forward to see how the actual data is going to be for this month, for last month rather. Then the other events coming in that same day, and that is the high-low unemployment rate, which is always released by the National Statistics, and it gives us number of unemployed workers divided by the total civilian labor force. It is a leading indicator for the UK economy, and if the rate is up, it indicates a lack of expansion within the UK, And as you can see, we have it. The previous data came in at 3.7%, so consensus is still projecting the 3.7% on that one too. Then the next event is coming in on Wednesday, which is the Consumer Price Index, another very high impact event, which measures the movement of price by the comparison between the retail sales of a representative shopping basket of goods and services. And we have a data here. The previous data here came in at 10.4%, and this we have a consensus of 10% here. So we are going to be looking forward to that one too. And then for the week, for the last trading day of the week, that is Friday, we have the S&P Global publication for the CIPS Services PMI. Is an indicator of the economic situation in the UK service sector. It captures an overview of the conditions of sales and employment. So this is another high impact event we are going to be looking forward to this week. So you can see how we have 4 major high impact events to look out for this week, and we shall definitely be seeing the anticipation of this event reflect on this chart as price action. So with that being said here, let's dive right into the 4 hours time frame, where I was able to identify a simple setup that we can use to guide our trading activity for this week. And what I simply did on the 4 hours time frame was to take into consideration what has been happening in this market in the last 5 to 6 weeks. And it is quite obvious that price action has been bullish in this market. And if we connect the series of higher lows, you will see we have a bullish trend line which has consistently been respected by price action, hereby pushing price to the upside, and at the same time emphasizing the strength of the buyers in this market. But something interesting happened here in the last since the beginning of this month. We saw how price appeared to have been trapped within a range between the 1.2550 level and the 1.23500 area, to emphasize that there is an indecision in this market. Now, one thing about this old structure is the fact that though it has been very bullish, but one thing here is in the last week's trading session, I wasn't convinced of this impulsive move to the upside, as though it broke out the previous high, but the breakout wasn't that significant. As you can see here, immediately we begin to see selling pressure resume around that area to push price back to the downside. And because of the situation here, I'm of the opinion that the 1.2550 level could turn out to be a strong resistant level that might be so strong for buyers to find a breakthrough that structure. Then another thing about this old structure is that key level at the 1.2400 level, which will definitely be my yardstick for trading activity this week. And the reason why that is, if you look at the structure there, you will see, considering what has been happening in the last couple of weeks, you will see our price action, that level rather, has been a major determinant of price action. It was a selling niche here. We had a breakout retest. We had buying pressure before it was broken to the downside here. And last week we saw buy pressure resume above that structure. And if you look at what happened on the last trading day of last week, we saw this impulsive move to the downside. And right now price action is currently trading along that key level at the 1.240 level. And what makes it more interesting is the fact that it shares a beautiful confluence with that bullish trend line that has been supporting that bullish momentum since the beginning of the month of March. So you will agree with me that we are at a critical point in the market right now where anything could actually happen. We could have a situation where buyers come in again, hereby respecting that bullish trend line to incite another wave of bullish momentum, or we could see a situation where a breakdown of that structure could happen, where continued selling pressure leads to the breakdown of the 1.23500 level to incite a sell-off in this market. So these are scenarios I'm going to be looking forward to this week, but there is a very high chance, considering the series of macroeconomic events we are looking forward to this week, we might see a very huge chopper situation between that 1.2400 level before either a breakout or breakdown of that structure will happen to give us a signal of where price action will be going. So I will be pausing the video here, but be rest assured that I will be with you right in the comment section on my TradingView platform to give you an update after monitoring how participants in this market will be reacting to the structure around this area during the early hours of the week. I hope this video has been of immense help in making your personal decision on the GBPUSD, and if it did, kindly support this project by clicking the like button. Thank you for watching, and I look forward to seeing you right in the comment section on Monday as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.